The Jared Dillian Show.
I'm Jared Dillian. This is the Jared Dillian Show. We're talking about, I guess you call it investing mental health or managing your emotions while you're investing, which is, I feel like I'm doing a bad job describing this. Let's try to do better. It's super, super important. And by the way, like nobody's had to think about this in 10 years because the market's gone straight up. So like what have you had to think about? I'm Jared Dillian. This is the Jared Dillian Show. If you want to call in and talk about this, it's 844-305-7800. That's 844-305-7800. You can also go to my website at jareddillianmoney.com. And let me just keep this super, super simple. Do more of what is working and less of what is not working. But the reality is that most people do the opposite. Most people do less of what is working and more of what is not working. Like in the example I talked about before, if a stock goes up, they sell it. So they're doing less of what is working. If it's going up, you should let it go up or you should buy more. And they do more of what is not working. If a stock is going down, they just let it go. So just think about that. Just do more of what is working and less of what is not working. And this is where the emotions come in. So if you have an investment, whether it's a mutual fund, a stock, or whatever, and it's going up, you should add to that trade. You should make it bigger. And this is where the emotions come in. You can only do that if you are a happy, confident person. If you are a fearful person, you can't do that. It really is about emotions. Personally, my investing, I have an insane amount of risk at any given time. Like I tell people about the amount of risk that I take and they can't believe it. Now I'm really, really good at building portfolios that are sort of uncorrelated and, insulated from a lot of noise. But I have a lot of risk. And guess what? I don't spend a lot of time worrying about it. I really don't. I worry about other stuff. And that's the thing about money worries. It's really the last thing in the world to worry about. Worry about your marriage, worry about your kids, something else. I mean, not money. Just keep it real simple. If something isn't working, just cut it. If it is working, then add to it. It's that simple. People make it hard. If you are experiencing stress with your investing, it is highly likely that you have too much risk. That is probably the source of your stress. Everyone's risk tolerances are different. People are accustomed to, by the way, there's this video going around the internet. I saw it on Twitter. These guys were in Vegas and they took $100,000 and they put it on one number in roulette. And they hit the number and won $3.5 million in Vegas. And there's the video. They're jumping around. They're going crazy. But those are people, if you're going to put $100,000 on one number in roulette, I think you have a very high tolerance for risk. Probably about the highest. It is not something I would do. And some people have a very low tolerance for risk. Some people have like 20% stocks in their portfolio and it keeps them up at night. But if you're experiencing stress, you want to get to the point where you have less risk. And usually how you do that is you cut your equity exposure, you cut your stock exposure. And we've had discussions before about the extent to which, the market's been going up for 11 years. People don't know what a bear market's like. They've forgotten. Financial advisors are trying to make sure everybody outperforms the index. Everybody is fully invested in stocks. I mean, it's just, the whole stock market is a cult. I mean, we've talked about this before. My guess is that, we just recently had a correction of about 7% in the stock market, and nobody even blinked. People started to get a little worried in December. The stock market was down about 20%. People started to get a little worried back then. My guess is that, people are so used to the market going up, it would have to go down a lot before they really started to think about it. And then it would kind of be too late. So, I would say that most people are unable to handle an 80-20 portfolio, but they seem to be able to handle it just because that portfolio has never been stress tested. We've just never stress tested any of these portfolios. So this is why I talk about the 35-65 portfolio all the time, or 35-55-10. And, I feel like I say this all the time. I feel like I say it over and over and over again. But, by the way, this is a great example. I was reading the Mr. Money Mustache blog again today. I'm like obsessed with that guy. What a clown. And he's of course, like obviously his whole solution is to go like 100% stocks and turn the heat up to 86, and like I think he goes to 7-Eleven and has dinner at the condiments bar to like save money. Like I think he like eats the relish, with like the plastic spoon. I think that's his dinner. So, it's absurd. But anyway, this, like he says on his blog, it's so funny. He's like, oh, I started investing in 2009 and it's 2019. I'm like, dude, you only know when stocks go up. That's your whole investing career, is that stocks go up. And your advice to people is to just like get like 100% long stocks because they're going to return 12% forever or whatever. I never thought I would get to the point where I would be old. Like I'm literally like, it's weird because, I write this newsletter for all these, sort of institutional investor people, and a lot of them are young and they haven't seen a cycle. They haven't seen a cycle. And if they have seen a cycle, they've just seen like one half of the cycle, like the up half. I've seen like a bunch of cycles. I've seen this a bunch of times. And I've also read a bunch of market history, and like all the way back for like 100 years. And the crazy thing about this cycle is that it just goes on forever. And like, it never stops. You heard about this company WeWork? Like WeWork is going to go public, and it is hands down. I can't even in a .com boom with like pets.com and all that stuff. I'm telling you, there has never been a bigger joke of a company than WeWork. Never mind, like it says on the prospectus, like in the S1, it says like our mission is to like change the consciousness of the world. It's WeWork. It's like an executive office suites. And basically their business model is they rent a building, they'll sign like a 10 or 20 year lease, and then they subdivide it, and then they rent out the offices on a month-to-month basis. So they have like a big duration mismatch, right? They're like locked into the building for 10 or 20 years, and they have all these people on a month-to-month. What do you think is going to happen when a recession hits? Like all the tenants are going to leave, and they're going to be stuck with this 20-year lease. Like it's literally like the simplest thing to understand of all time. And this company is going public, and people are going to buy it. And, this is, like I said, I've seen a handful of cycles, and this is the type of stuff you see at the top of a cycle, the really goofy stuff. I remember being in San Francisco. I lived there in the .com bubble. Amazing. Absolutely amazing. Yahoo had their own taxi cabs. You remember Yahoo, right? Yahoo now is like this garbage news portal for like people in Idaho, right? Like, baby boomers in Idaho. Like it's like all these Midwestern people. Like Yahoo used to be like the hot thing. And the stock was like trading at $250, but Yahoo had these taxi cabs driving around San Francisco where you could get internet in the taxi cab. And that was in like 1999. And that was like futuristic. Nobody ever seen anything like that before. Every single billboard in town was like .com. I've seen it. So you had like this Mr. Money Mustache guy, like he started investing in 2009, and he thinks he has like the solution to the universe. I'm like, oh my God, it's incredible. It's absolutely incredible. By the way, the people think the goal is to buy low and sell high. How many times do you hear that? You have to buy low and sell high. That's actually not what you're supposed to be doing. You're supposed to buy high and sell higher. That is actually what you're supposed to be doing. which, by the way, goes with what I was saying earlier. If something works, you do more of what works. You buy high and it goes higher. Financial fears are the worst kind of fears. Like even in 2017, I was suffering from that stuff. If you are experiencing fear in this environment, which is the most favorable environment of all time, then you have too much risk, and you need to cut risk. And taking a walk around the block doesn't help, and this is not going to go away if you ignore it. I'm Jared Dillian. This is the Jared Dillian Show.